Let's pose that question to Siddharth Khemka as well. Siddharth, within the entire two-wheeler space as well as the biking space, which are the stocks that take your preference?
Yeah, very good evening, Anisha. So, if you look at the entire two-wheeler space, there has been a lot of momentum off late, especially some of the larger ones like Bajaj Auto, which saw a significant uptick both in terms of profitability as well as in its stock price. But if you look at our preference right now is with Hero MotoCorp, largely driven by the low valuations or the steep discount that it trades to some of these other peers, including the likes of TVS Motors. So we see the demand recovery led by the rural segment, which has been a drag for last couple of years. We expect that to improve from this year onwards. And to back it up, the company has been launching several newer products, both in the traditional as in the EV space, which is picking up, gathering pace for Hero Moto. The stock is trading at almost a 15 times one-year forward compared to a 30 times TVS Motor PE. And yesterday we saw the new entry by Hero Moto into the premium segment, which it had so far not catered to in association with Harley. So I think all this put together, we believe that Hero could do well in the two-wheeler space. We have a buy rating on Hero Moto and we have a target price of 3,500.
Okay, the primary market as well has been pretty active of late. We had a new listing today, HMA Agro. It's up about almost 7%. And, listed on the exchanges today, a 7% premium is what it's quoting at from where it listed, and now of course it's eased off a little soft in trade right now. And then there's Senco Gold IPO as well, which opened today. So that of these new entrants or particular IPOs in the offing that you're looking out for?
Yeah, so we did had a look at some of these IPOs. Definitely, we had a look. Although we did not had any views on HMA Agro, but some of the others we have been liking, and we saw the strong interest, especially in the two recent IPOs, the Cyient IPO, DLM IPO, and the other the drone company IPO. So I think there are some of these unique IPOs that are being offering that the market is liking, and compared to that, you have some of the other the usual businesses which the market is clearly ignoring and not kind of having that kind of flavor with certain IPOs like the PHK Ventures, which the market has clearly given a miss. In the forthcoming IPO, we are seeing Senco IPO opening and seeing some interest, given that it's an interesting jewelry space where it has a strong brand in the eastern region. The IPO is attractively valued if you look at some of the comparable peers, be it the Kalyan Jewelers or the TBZ and Tangamail Jewelers, which are the smaller retailers. We don't compare it with the market leader Titan, which definitely commands a lot of premium. But it is coming at an IPO of about 15 times FY23 compared to some of the others which are trading at 25 to 30 times. So definitely there is a lot of money that the bankers have left on the table for Senco, and it looks interesting, at least as of now.
Okay, so that's it, take coming in on latest IPO, Cyient, DLM and Senco specifically. Those are the two stocks that Siddharth was watching out for. But quickly, let's talk about some of these price volume buzzers as well. In trade, we are watching out for Tata Teleservices because that's shown a bit of a breakout. It snapped the 3-week losing streak. And then the volumes today are 4x the 10-day moving average, so we're watching out for that. 6% higher for Tata Tele. Punjab National Bank has also seen a breakout from the reverse head and shoulder chart pattern. It's hit a 5-month high on an intraday basis. The volumes at 4 times the 20-day average. And Bharti Airtel, which has seen a bit of a breakdown from upward sloping support trend line, it's been forming higher highs and higher lows for 4 weeks. But today there's a bit of a breakdown which is visible as far as Bharti Airtel goes. Siddharth, what's your view on the entire telecom space? Is this something which is still investable or still a good idea to look at, or there are so many opportunities available in the market that telecom is getting completely sidelined?
Yeah, Anisha. So I think definitely if you look at the telecom space, there has been a lot of to and fro's, and with only two companies which are there as a direct investable, you have Bharti Airtel and Vodafone Idea. You can play Reliance Jio only through Reliance Industries right now, which comes with a lot of other businesses. There is definitely a lot of interest in telecom space, given the strong growth that we are seeing in the ARRs, the shift towards, or you can say the users shift towards the higher bands from upgradation from 2G to 3G and from 3G to 4G, and now the upcoming implementation of 5G, which is much awaited, which could also drive growth for some of these players. Interestingly, a lot of these companies have, at least Bharti Airtel has reduced a lot of its debt and is now showing strong growth. So overall, I would say that definitely it's a space one can look at and can definitely look at growth, especially if you look at Bharti Airtel, which we continue to like, and I have a buy rating over there.
But just let's quickly take stock of what are the other spaces in the market at this point of time, and PSU banking space is definitely showing quite a bit of bounce back. Siddharth, which names in the PSU banking vertical would you recommend apart from SBI?
Yeah, Anisha. So I think the PSU banking space is definitely picking up pace, especially given that there is a lot of interest in the market, and the banking sector is now taking the lead back. Again, the PSU banks would report strong numbers, and on back of that, the market is liking some of the other names. So within the PSU banking names, we like Bank of Baroda, which is a buy for us with a target price of 240. We also like Canara Bank with a buy rating and a target price of 400. If you look at the overall banking space, although you would see the normalizations of NIMs, which would limit the growth from the high base that we saw in FY23. But nonetheless, the overall banking sector, as I said, would continue to report net profit growth in excess of 20%, and the PSU banks would far outperform in terms of growth to their private peers, and which is why there is a lot of interest within the PSU banking space.
The second best now, which was FMCG. Siddharth, what are your top recommendations? Is it the likes of ITC, etc., or some other names that catch your attention?
Yeah, Anishal. So I think within the FMCG space, we continue to prefer ITC, which has been our top pick within the FMCG space. Both its cigarette business and the non-cigarette FMCG business have contributed to the growth and the margins in FY23, far outperforming the staple segment. Plus, you had the added growth from the hotel space, which has been continuously doing well. It posted a healthy 24% earnings growth in FY23, while we are expecting the EPS growth of about 15% over the next 2 years, and we continue to expect strong re-rating from there. The other stock that we are liking from the broader consumer space is Varun Beverages, which has consistently delivered in terms of performance, and the market has rewarded. They have expanded capacities in India. They've acquired certain regions. They've got into the food business, and now they are going global with some of the other high growth regions, which can add to the growth. So I think these two stocks within the consumer space is what we like, ITC and Varun Beverages.
Which continues to underperform massively. Siddharth, why do you think that's the case?
I think we don't have a coverage on Nykaa, but we had been seeing some of the other stocks within our coverage, which is Paytm and Zomato, both of which we have been liking at least for the last couple of months, based on the improvement in profitability. If you look at Paytm, the monthly updates have been quite encouraging. They have reported strong growth, not only in the gross merchandise value, but also the number of loan disbursed, which has been their key business, which has been driving profitability, the lending business. And that is what something which has made us positive on Paytm. We have also upgraded our target price recently to 1,050. We had earlier initiated coverage with a target price of 900. So we believe that constant improvement in the margins as well as the operating leverage will help improve Paytm's profitability. We expect a 26% revenue CAGR, and we are expecting it to turn both EBITDA and net profit positive by FY25.
Just quickly, since it's just 3 minutes left for the closing for the trading session today, what's your expectation from the Q1 earnings, which are likely to kickstart next week? Is it going to be an earnings season where we are likely to see more downgrades, or do you think we're already going with somber expectations?
So I think overall the quarter would be mixed bag. There are certain sectors which would not report a very strong numbers. The say for example technology sector where we are expecting a little bit impact on earnings because of deteriorating macros and wage hikes. But on the other side, we would see strong earnings from the sectors like banking. NBFCs would also start chipping in with the strong numbers. Auto is another sector where we could see continuously reporting strong numbers. So it would be definitely be a mixed bag. We are not expecting a very strong quarter per se, but I think overall the expectation from the quarter being at a Q1 and a lot of sectors would see some recovery because of the demand commentaries that we saw last quarter. Some of the companies are definitely expected to report strong numbers. We have already started getting the pre-quarterly updates, especially from the likes of banks and some of the retails, which shows that the demand environment is pretty strong.
Okay, that's the take coming in on the overall market. Siddharth, we let you go on that note. Kunal